Hello, welcome to FountainFX on Wednesday the 26th of February 2014. Before we get into looking at the market today and what the news impact was from yesterday, I'm going to take a look at the trade that I took yesterday morning with the European Open. Jason has emailed just saying, can I explain it in a bit more detail? Really what was happening is that we had this area of consolidation in the morning. It was only literally 5 points up and down, so very tight area of consolidation. I've just highlighted there. And then around about 8 o'clock we saw that price pushed up out of it, so it was showing the direction of the momentum. I did actually have a buy order in on that candlestick, which is at 137.35. It wasn't triggered, because the other thing you have to be aware of when you're working with brokers is they have a spread. My broker has around about a 2-point spread on the euro US dollar. That's their commission. And price travelled up and then it turned and it pulled back down into the area where price had pulled away from. So I adjusted my buy order and was triggered at 137.38. So placing a stop below the previous area of support, allowing for slippage and spread, etc. I put a stop at 137.25, so that was a 13-point risk. If you subtract the 137.25 from 37.38, you've got 13 points. Now there is a rule of thought or school of thought out there which says you should be able to trade and look at 2 to 1 and 3 to 1 and all that kind of thing. Yes and no, I would say, and the reason being is that I did have a target of around about the 137.60, and the 137.60 was a previous area of resistance. If we go back, we can see from the previous day price was up here somewhere. I didn't push it to the extreme, just that you know, because obviously the thing is that when you're trading, people will start trying to get out because they know they're getting up to this area of resistance. So the sell orders can start coming in earlier than the area of resistance, because people who've bought down here are going to be selling to be able to bank their profit rather than just let the price ride. Because if they'd have let the price ride, they'd have ended up having price virtually come all the way back to their entry, or I would have. Price would have come all the way back to my entry, and I'd have sat there and watched profit get eaten away very quickly. So 137.60 was my target. I could see that. I also was aware of this area of resistance here. As you can see, it was off that the price pulled back down. That was at the 137.45. So my view is that once price broke above there, you've got a gap between this level and the next level of around about 15 points. So by having a risk of 13 points to make 15 points or a little bit more was not a bad trade strategy, and it's a day trade, so we're typically looking at 1 to 1. If you're going to use this as a way of trading to swing trade or anything like that, and people talk about looking at 3 to 1 and 5 to 1, etc., if I'd have used that strategy, I'd have lost money, wouldn't I? If you look at this, if I'd have looked for a 2 to 1 or a 3 to 1 risk reward, my target would have been way up here. It wouldn't have got triggered, and eventually price came back down and broke below this low, this area of low. So I'd have just fed 13 points of my money to the market. Now the other thing to share is in terms of how I position size the trade that I used, so I'll just go through that now. So based on that risk profile, if I go through here, I have a $20,000 account, I trade every day. I look at 2% risk on a trade, which is $400 based on that. If we're looking at a risk area of 13 points, then $400 divided by 13 works out at just over $30 a point. So based on $30 per point, that's like 3 lot sizes. One lot size is $1,000. So therefore I can trade $3,000 of my money. And basically I'm looking at using my risk to control the amount of money that I trade. Now what does that $3,000 mean? So that $3,000 of my money, because I'm trading a leveraged account of 100 to 1, means that I'm trading $300,000 of currency, and that's how I need to load it onto my platform. So I buy $300,000 of currency at 1.3738 dollars to the euro, And then what I did is I took the target up here at the 137.60, so that I would get filled. I put in a sell order price of 137.59, and I closed 2 of my positions, so 200,000, and I left 100,000 riding on the possibility that price could have pushed higher. There was a lot of predictions of strength in the euro, weakness in the dollar, and also with regards to the fact that we were in an ascending triangle on the bigger picture and all this kind of stuff. So I allowed that to run. Price got up to here, pulled back, and then pushed back up again. On the basis of that, I moved my stop, which was down here, the 137.25. When price was up here and it triggered, I moved my stop to my entry, so it made sure that I wasn't going to lose any money. So I wasn't allowing price to come back down, and then I was going to have minus 13 points or minus $130, having made some money on that. And basically, I moved my stop up to just below this area here, the 137.48, especially when price closed and it pushed higher here, thinking that, well, look, we've got all these long wicks, shows that there's buying pressure. Looks like price is going to push back up, maybe test this resistance again, and it could pop through, but it didn't. So I moved my stop to there, I kept it there, price turned, fell through, and closed me out, stopped me out. So I stopped out for a price of 137.48, which was 10 points of profit, another $100. So with 2 positions in there at 21 points worth of profit, that's 21 points times 2, which is 42 pips, and I'm trading at that point. It's trading at $10 a point for 1 lot, so therefore it's $20 a point for 2 lots. So 20 times 21 is $420, and then there was just 1 lot left in, which is $10 a pip, which is $100. So in total, I made $520 in that trade, which was roughly from 8 o'clock through to 12 o'clock, so 4 hours. Anyway, that was that trade from yesterday. Well, let's go and have a quick look at what's happening today, or potentially today. Yesterday we had out at 5 o'clock, we had at the US dollar, we had consumer confidence come out from the States, and it was negative. It was slightly below what was forecast. So did it have a negative impact on the dollar? And this was at 5 o'clock here, this big red candle that came down. So in reality, did it have a negative impact on the dollar? No, it had a positive impact. Everyone sold off the euro and bought the dollar. And then it turned and it came all the way back up. Now why did that happen? Because typically round major news, the institutions pull all their money and they stop trading. So there's not a lot of liquidity in there. There's not a lot of buyers and sellers. So price will move long distances to try and be able to match orders between buyers and sellers, and that's why you get a lot of whipsaw action. So when news comes out, I would recommend that you're very careful. In fact, you don't actually trade during the news, especially until you understand what's going on. And that's what happened yesterday, so you can see that. But since then, has the dollar shown any further sign of weakness? Has it pushed above the resistance? No, it hasn't. So that piece of fundamental information hasn't really made a lot of impact on the marketplace. If we look, keep going sideways, let's see what's happening this morning. While I've been talking to you, I've probably missed the opportunity to trade, but I haven't. We've got a doji formation. So we've got price pushing down, pushed up here, but we've got, if you look there, big long wick from this area here, the 137.45, which is where price opened at this morning. So the open was 137.45, and it's pushed down from there, came back up, big long wick, showing some selling pressure coming in here, and then we've now got a doji form. So don't really know what to deal with that. It's a case of just watch, see what the market wants to show, whether or not it does want to sell off. That would be interesting to see. Sometimes it can just pull down to then turn and go in the opposite direction. One thing is just to note is that we are in the middle of no man's land. There is an area down here previously highlighted by there of resistance, of support. If you see the wick here came down, touched that area of support and then pushed back up. So the 137.15 is an area of support, 137.60 is an area of resistance. So really we need to be looking at price between those 2 points and what's going to happen, and that's really the opportunities to be trading at the moment. Don't know what's going to happen off this open at the moment, but we will see. And that's it from FountainFX. Thank you very much. Talk to you tomorrow.